The current market conditions have illustrated the Dow coming up off the bullish harami, coming up to the T-line, confirming that the T-line is not acting as resistance anymore, and now has come up to the 50-day moving average. It closed basically right on the 50-day moving average today, with stochastics coming up. However, there are three possibilities of what can occur once this price movement has developed. One, if it opens positive tomorrow and they continue it up, that basically tells us the 50-day moving average is not acting as resistance. We'll be remaining in an uptrend as long as it doesn't close back below the 50 and or the T-line. Two, it's not unusual after a strong price move hitting a major resistance level for it to waffle in between the T-line and the 50 until the T-line can push it right back up through the 50 again, continuing the uptrend. Or third, if they do a bearish engulfing signal, a bearish harami, a failure of the 50, this can be a blue ice failure that's broken through the support level, came up and retested it. When it fails, it's going to the next support level, which in this case would be down to the 200-day moving average. The NASDAQ is almost as compelling. When it hit a doji in the oversold area, gap up doji, gap up to the T-line. Now it's gapped up to where it just closed above the 50 with stochastics coming up. However, we had kind of a little shooting star type signal, which once again puts the NASDAQ in the same condition as the Dow. If it opens positive, we're in good bullish mode. If it opens slightly lower and trades back down and stays above the T-line is going to push it back up, eventually back up through the 50-day moving average. Or if it opens lower and closes below the T-line, we could have a blue ice failure that would take this market down fairly strong. It's knowing what can happen based upon what the signals are doing at specific levels that allows investors to make their decisions immediately versus waiting to see what the market is going to do after a couple of days. Our recommendation on RKUS finally broke out today based upon this fry pan bottom and that it couldn't close below the T-line. There was two alternatives. If it had stayed sluggish today, you'd close out the position and put a buy stop right above this level, with the rationale that if it broke out of this pattern, it was going to move much higher. This one's got a new breakout of a fry pan bottom. Look for it to go higher. The advantage we have with candlestick analysis is that when this stock was pulling back, doing dojis, we know the characteristic of a doji is indecision. So it wasn't hard selling. Remember, this market has had some very hard selling going on, yet this stock has stayed up above the T-line, telling us that they weren't selling it off. And when they were selling it off, it was very indecisive selling. This is what allows a candlestick investor to be prepared for what could be happening next based upon a breakout of a price pattern. That'll be it. We'll see you in the chat rooms.